Hello, everybody, and welcome to the Thrive and Prosper podcast. I'm your producer, Zach Ritchie. So after the fantastic interview last week between Ari Page and the drumming sensation T.L. Jenkins, it was decided that I'm going to be handling the hosting duties today. Now, keep in mind, before I became a content producer here, I was actually a credit negotiator and funding consultant for over 10 years. So I wanted to take this opportunity of flying solo to go over some truths about banks, some insight into how business credit really works, and how to start building some funding for a startup without hitting a brick wall. So we all know that money is what makes the world go around. But what if there were things that we know about money that turned out not to be true? So truth number one, banks are in the business of making money, not helping you save it. If you take a moment to think about it, banks are one of the most profitable industries in the world because they make money from your deposits and investments. They're not just like inventing new money behind the scenes. They are charging for the money that you're putting in them to hold. According to McKinsey & Company, banking industry profitability reached a 14-year high in 2022 with expected returns on equity between 11.5 and 12.5%. Revenue globally for banks grew up to $345 billion. So with that being said, oftentimes it pays to shop around for the best services and interest rates available from different providers. Oftentimes as business owners, we get into a rhythm of using a certain bank just out of convenience. But if there are better opportunities out there, if there's a bank that's willing to put its neck out in order to insure your business with them, that's who you should be working with, not just the one that's closest to the house. Anytime you're jumping into a new relationship with these banks, make sure you know all the fees associated with the banking service so you can make an informed decision about which bank is right for you and your business's needs. Number two, fees can add up quickly and banks don't make them clear to customers. So in many cases, banks don't go out of their way to warn you about fees associated with any of their services. And so unless you're really looking at that beforehand, they can quickly add up and take a huge chunk out of your wallet. So many times customers don't even realize how much they're paying in fees until it's too late. And high fees may deter them from using banking services altogether. So in a perfect world, banks would be abundantly transparent about any kind of potential fees you might be running into or, any kind of situation that may come up that's going to cost you money. But they are a business at the end of the day, and businesses tend to get busy. So, just like you, they're not here to babysit you every 10 minutes and go, hey, wait a minute. There might be a fee if you do this or this. So what does this mean? It just means you need to do your research. If you're going to open up a business checking account or savings account or a business credit card or whatever the case is, you just need to make sure that you're aware, oh, hey, this could be a potential fee. I got to be careful. I got to make sure I got at least $200 in that account at all times or whatever the situation is. Just be informed, do that homework beforehand, and you're not going to run into these kind of issues that the banks may not be forthcoming with all the time. So truth number three, banks don't really have the money that they're lending to borrowers. Banks operate on a system called fractional reserve, which allows them to keep only a small fraction of the money that they lend available on hand at any time. The 1913 Federal Reserve Act requires banks to maintain the minimum cash reserves needed to clear outgoing checks. So one of the cheapest ways to meet those reserve requirements is through retail deposits, aka the money you keep in your savings account. So banks don't just take the money that you deposit and turn around and load it at a higher interest rate. But what they do use the money for is that they balance their books and meet the necessary cash reserves that make those types of loans possible. So it's its own little working system internally. However, that means just wanting to liquidate everything that you've ever put in a bank on a moment's notice may not be so easy. It might be a little more complicated. It might take more time. So just because you've deposited X amount of $1,000, keep that in mind that doesn't mean it's just ready to go. It may be a situation where you need to give that bank some notice before you start pulling out big chunks, if some kind of investment or emergency comes up. So next truth, your bank may be selling your personal information. While the Cram-Leach-Bailey Act of 1999 prohibits banks from sharing your non-public personal info, like social security number, income, outstanding debt, etc., they do share your personal information for business and marketing purposes. So they may share your information with affiliated or non-affiliated companies for them to market their products and services to you. Now, you can always opt out of these types of programs to keep the bank from sharing that info, but they're always going to share your info with the government for legal investigations, credit reporting agencies, service providers on behalf of the institution. There's no getting around that part. Now, so far, you might be hearing some of this information and starting to panic that, oh, the best solution is just to stuff my money under the mattress. But we're not saying that. What we're saying is that there are additional circumstances and complications that are associated with banks that you may not be aware of right now. However, we're going to go into an explanation as to how to work alongside these banks and how to get the banks to work for you and not against you. But next truth here. Bank employees are often under a lot of pressure to sell products that may not necessarily be in your best interest. Now, while many CEOs of banks have taken action to offer, customer-centric products or services that are in the best interest of the customer, many employees of banks have mentioned that philosophy hasn't necessarily trickled down to everyone working with the banks. What I mean by that is many bank employees have shared that credit card sales are paramount and that there's very little concern as to whether the customer actually needs or would qualify from such a card. In some cases, many workers who failed to meet these sales goals were often disciplined or denied promotions. So that starts creating a system of intense salesmanship. So many banks offer a bonus structure that is reliant on how many sales you've made. So, again, banks are businesses, so you have to do your research. So don't necessarily believe at face value that a new card or loan is going to magically be good for you just because you're told so by a representative. You want to research any kind of card or loan option and look to see if it's really going to help you out, if the pros are going to outweigh the cons, and if it's not going to hurt your credit too much. Because some of those representatives may not even be looking at all the factors and may just be worried about reaching that next bonus tier or not getting yelled at, and so they're just going to push these kind of offers on every single person that comes across their desk. So just be careful. Just like when credit card offers are mailed to you, that doesn't mean, hey, yeah, you should probably just go with every single one of these, because then you'd have 1,000 credit cards to your name and your credit score would be in the toilet. The idea is if an option comes, if an opportunity comes your way, take it in stride, look it over, really dig deep and see, is this something that you really could benefit from? Next truth, you have more options than just banks when it comes to saving and investing money. There's higher yield money market accounts. So money market accounts are actually one of the simplest alternatives to just depositing money into a traditional savings account. And they are protected by the Federal Deposit Insurance Corporation, or FDIC, just like traditional savings or checking accounts are. So these accounts will typically pay much higher interest rates than just regular savings accounts, but money market accounts typically offer limited checking account services to go with them. And by limited, I'm talking like usually customers can only write a maximum of like 5 to 10 checks a month. Like that's the amount of limited we're talking about here. Now, as a traditional bank may offer a 0.10% interest rate for standard savings, a money market account may grab as high as 0.25% interest on a similar kind of account. So you'd be getting a considerable chunk of change added to whatever you're depositing. You can also do a CD, a certificate of deposit. Now, these are ideal for someone who's not going to touch their savings for a year or two at least. The longer you leave the money in a CD account, the more interest you earn. And interest rates for this account are higher than typical savings and checking accounts. But the trade-off is that your money is going to be basically locked up for the term of the CD you agree to. If you touch it before, you're probably going to have to pay fees and penalties because of it. According to Bankrate.com, the annual average percentage yield for 2021 was 0.21% interest rate for a 1-year CD, and the average was 0.95% interest for 2-year CDs. So these are just a few options, but you want to check with your financial advisor to make sure these accounts make sense for your situation. And the final truth here, bankruptcy is not the end-all, be-all, end of the world for you financially. So bankruptcy is a big, scary thing. However, it doesn't have to be a permanent situation. It is possible to recover and get back on track with financial security. Now, bankruptcy can help you clear your debts and give you somewhat of a fresh start in life. Bankruptcy protection will allow you to have time to reorganize your finances and look for ways to rebuild your credit score. There are lots of options available, such as debt consolidation and refinancing, which can make a bankruptcy much more manageable to deal with. With the right planning and professional advice, bankruptcy can become an opportunity to learn valuable money management skills that will benefit you in the long run. Now, that being said, it does not mean as soon as you have a little bit of debt to go rush to bankruptcy. Bankruptcies typically will stay on your credit report for anywhere from 7 to 10 years, and that's a long time to deal with that sort of a burden. However, it doesn't mean that you are forever judged. It doesn't mean that you're forever locked out of getting credit again. It just means that if the worst happens to happen, you can still move on from it and begin the rebuilding process. We've had tons of clients who had to deal with bankruptcy, who got themselves out of that situation after a while and were able to rebuild to a very luscious credit situation and plenty of business funding. But it's not going to happen in the next 10 minutes after you file bankruptcy. It takes a little bit of time. So as I said earlier, the purpose of this video was not to scare you out of the banking system or to have you call your local bank and shut down every checking account you've got with them. The purpose is to really look at what is your relationship like with banks. Is this a situation where you have just sort of thrown money at them in hopes that it's safe and you just keep pulling it out and maybe you're paying fees or getting dinged with something here and there and you're not really utilizing your finances or your banking relationships to their highest potential? Well, if that's the case, you may want to talk to a professional, somebody like a financial advisor, or even a service like Fund and Grow. We've been in finance for over 15 years, and in that time, we have learned a lot about what banks are looking for in order to really kind of put you in that elite status. You know, if you have enough funding that you're putting into a bank, if you have enough resources or enough experience with working with the bank, you can get that sort of preferential treatment. And we know exactly what that's all about. And so oftentimes we help our clients to really establish stronger, better relationships with banks so that you're not falling into these sort of shadowy areas where you're getting dinged all the time, or, you know, you're not getting the most out of your accounts, or the banks aren't giving you the kind of money that you need in order to invest how you want to invest, or whatever the case is. The idea here is banks can be a very powerful tool if you do your research and you know what you're looking for. So you've gotten your business officially started with a slow but steady stream of customers. And hopefully you're celebrating the fact that you took the leap to start your business and things are starting to work out. But now you're noticing that some of the customers only purchased from you once and it's been crickets ever since. And now maybe you're spinning your wheels trying to figure out how you can not only attract customers, but really keep them on board for the long term. Well, if this scenario resonates with you, you're in luck. So first we have prioritizing customer service. Now, it doesn't matter how great your product or service is. If your customer service is garbage, that's all anyone's going to remember. Customers will never purchase again. Some may even post negative reviews about your company and ruin your reputation before you've really even had a chance to form it. Reviews are everything nowadays, especially with how easy and readily available they are online for future potential customers to see. So with that looming overhead, customer service is not a set it and forget it kind of thing. You have to constantly be paying attention to it, always looking for ways to improve, even when your business gets bigger. How many times have you worked with a big company and they've given you bad customer service? Did you ever want to work with that company again? Of course not. And your business should be no different. Now, at Fund and Grow, we're always making strides in improving customer service. In fact, there was a time where we had a phenomenal team for customer service, but our phone system was out of date. It wasn't meant to handle the call volume from the number of clients that we were helping. And because of this, clients weren't getting the best service possible. Now, that's a growing pain of scaling your business that we hadn't really considered. So what did we do? Once we realized the issue, we upgraded that phone system to better help our clients. We also hired some extra staff for that particular department. And since then, we've cut down our call wait time immensely. If we hadn't fixed that issue, then it wouldn't have mattered what kind of stellar results we were getting for our clients. The lack of phone time would be all they were thinking about. And it's the exact same thing for your business. Now, the second tactic is listening to customer feedback. Now, this goes right along with giving good customer service. If a customer reaches out with a complaint or suggestion like, oh, hey, I love the product, but the packaging came in squished, or they suggest, oh, I want more color options for the product, or extending availability for a service that you already offer, or even, hey, if you can give me some other recommendations, then I don't have to go anywhere else. I can stick right here. Listening to your customers and at least considering their suggestions will show that you care. Now, implementing changes and suggestions doesn't have to happen overnight. In most cases, it's going to take some time. You may need to hire more staff, you may need to change your schedule, or even purchase new software. Your customers don't expect major changes to happen overnight, but just taking steps towards making improvements, that's going to make sense to them. So let me give you a personal example of this. So there was a time when we first got started that we only offered 0% interest business credit. That's it. So even at that time, it was an amazing tool, but a lot of clients needed help paying down their personal credit card balances just to qualify for the main service. And at that stage, we had zero options or tools to help them with that part of the journey. So we built a personal loan program to help bring down personal balances and get the clients who were struggling to qualify for business funding closer to the finish line that they were looking for. Now, more recently, clients were looking for options to use in tandem with the business credit that we already obtained for them. So we went right back to the drawing board and we built a business loan and line of credit program for them, which gives our clients more funding solutions. It boosts the chances of them qualifying for one of our options and gets more entrepreneurs the funding they need. We did that based off the feedback of our clients. So for your business, if one customer has a complaint or suggestion, chances are other customers have it as well. So it's worth at least taking their suggestions under consideration. Now, the third long-term success strategy is using different channels to reach new customers. This is huge. While the majority of your customer base may use a specific channel, say Facebook, that doesn't mean you should ignore other channels where other prospects might be. And on top of that, just because one marketing strategy works doesn't mean you should flat out ignore other options. If you have success with SEO, that doesn't mean you should ignore PPC ads or making content yourself or email marketing. Using multiple channels and strategies allow you to reach more prospective clients. For example, email marketing allows us to reach prospective customers that maybe don't follow us on social media or on YouTube. Or even on top of that, affiliate marketing allows us to tap into another business owner's audience without them ever interacting with us on our own channels. So focusing on one strategy for getting customers is a surefire way to run out of prospects to share your message with. By taking on multiple strategies, you can extend your reach and keep customers flowing through your sales funnel consistently and constantly. Now, before we get into that final strategy, go ahead, slap a like, subscribe if you haven't already, if you're finding this video helpful. That kind of feedback is exactly what we're looking for. And if you've got questions or suggestions, save them for the end, throw them in the comments. So back on topic, we're going to close out with probably the most important tactic out there. Learn from your mistakes, and when the time calls for it, take some risks. Every entrepreneur, regardless of how long they've been in the game, makes mistakes. No single entrepreneur has it all figured out, whether it's a marketing strategy that didn't work, or a business relationship that didn't pan out, or even just like a mishap with inventory. Every entrepreneur has made these mistakes. And when you expect perfection from yourself as an entrepreneur, what you're actually doing is setting yourself up for disappointment. Mistakes are inevitable. The best things you can do when mistakes happen is, number one, own up to it. Number two, learn from it. And yeah, Funding Grow has made mistakes over the years, but we instill in our team that when a mistake happens, we don't cover it up, we address it head on, we work together to find a solution, and we learn to avoid it in the future. And as a business owner, you have to become comfortable with the idea of taking risks, even when it comes to trying new methods or launching new products or services or creating a new business partnership. Some of the single greatest successes you're going to have in business happen from the biggest risks. And if it doesn't work out, at least you know what doesn't work and you can take strides to figure out what does. As an entrepreneur, one of the biggest challenges that you're going to face is accessing the capital you need to get started or scale your current operations. In most cases, you'll apply for a loan, but it gets denied because of some kind of revenue requirements or because your business is too new or a litany of other reasons. So then the question becomes, what do you do from there? Maybe you move on to whatever other option you can find because you know for a fact that cash flow is the lifeblood for any business. So now you approach a private investor and they don't see the potential or revenue numbers that they want to see, so they deny you as well. So before you know it, months have passed and you just can't get your hands on the money that you need in order to make your business dreams a reality. Does that scenario sound familiar? So the biggest mistake, we're going to get right into it. We're not fluffing about. The biggest mistake is taking a lender's initial decision as their final decision. Now, you may be thinking, wouldn't they give me their best offer the first time around? And if they didn't approve me, then what's going to make them change their mind all of a sudden? Most applications nowadays are literally just scanned by a computer. So a computer-generated decision is made with either an approval or a decline and a potential approved credit limit. Meaning a human being doesn't typically take a look at your credit when you initially apply. It's all done through a computer system. But even going beyond just approved or denied, even if you get approved by this computer system, you can actually get approved for even more than the initial amount. How? It's all about negotiating with the underwriters. If you can get a human being on the phone and discuss the application with them, that's going to allow you to get the amount of funding that you deserve. I'm being serious. All you have to do is just call up the underwriters and explain why your business deserves more funding or why you didn't deserve to have your application initially denied. That's it. That's what we're talking about here. So from there, you may be wondering, okay, well, Zach, if this is so easy, then why don't more people know about it? That's the catch. Unfortunately, the catch about remedying this mistake is time. Getting a hold of the underwriters takes a lot of time. You could spend hours on hold, not even talking to anybody. Seriously, sometimes you'll be on hold for like 3+ hours. And when you finally get to a rep, they accidentally disconnect the call. Or the call gets dropped while you're on hold and you have to start all over for another few hours. This is time most entrepreneurs don't have to burn. When they're trying to get their business going, they may still be working a part-time or a full-time job, taking care of their family, and all their other daily tasks. They don't have 4 hours to burn getting a hold of a representative at the bank they applied to. You also have to speak the underwriter's language in order to convince them that your business is eligible for the amount of funding that you're looking for. Now, because most people don't even know that negotiating with underwriters is a thing, and the ones that do don't really have the time to commit to it, a lot of business owners trust Fund and Grow to do this kind of thing for them. And so I've actually got a couple of examples here to explain in more detail how the negotiation system really works with actual client examples. But before I show you some of these examples of negotiations at work, go ahead and give this video a like if you're finding this information helpful at all. This helps us to really sort of steer the direction of our channel and know what you as business owners are really looking for in regards to information to help your business grow. So slap a like, subscribe, and let's get into the actual nuts and bolts of negotiating for business credit. So taking a look here, starting with Bank of America, it was initially approved for $9,000, and we were able to increase that initial approval all the way up to $17,000. However, much different story for the other 3 banks. Chase, Elon, and Integrity Bank all denied this client right out of the gate. And thanks to our team really pushing these banks, they were able to overturn those initial denials into a $48,000 approval, a $15,000 approval, and a $20,000 approval. And that was just in one round. You can see here, each round we grew more and more and got more and more funding in until finally we ended up at over $350,000. Second client here, you can see zeros across the board to start with. But we were able to overturn nearly every single application until we finally achieved our goal for this client. So when it was all said and done, this client received $399,500 by working with us and having Fund and Grow negotiate on their behalf directly with the bank lenders. Without our negotiations, they were sitting at about $148,000. With our negotiations, we were able to get that up to almost $400,000 in business credit. So client number 2, without negotiations, $0, all declines across the board. With negotiations, we were able to get them up to $171,500. These results are incredible. For these business owners, this is an absolute shot in the arm to get them to that next level they're trying to get to. So as you've probably guessed, a lot goes into getting results like this. Not only do you have to have the time to spend on the phone and on hold with lenders, but you also have to know how to speak their language and advocate for these businesses in order to get them approved or overturned for the highest amounts possible. Basically, you're having to go in and showcase that your business is on such a high level that they would be crazy for not giving you the capital that you're looking for. So in these cases that I've shown you here, the funding we're getting, we are doing that every single day at Fund and Grow. That is what we stand for, to help entrepreneurs achieve what they're looking to achieve through business funding. And so we've mastered the art of negotiating with the lenders, so much so that our CEO, Ari Page, has created an entire business credit masterclass that includes the tactics and strategies that we use every single day to get results like the ones we've shown here. In this training, you'll learn how to access up to $250,000 in zero-interest business credit that you can use to start or grow your business without the hassle of chasing down funding sources. We'll also show you how to position yourself and your business entity in such a way that the banks will be practically falling over themselves to give you more funding. I highly recommend giving it a watch. I have actually gone and linked the free masterclass in the description. And that's all I have for this episode. I hope that you've enjoyed me helming the ship by myself. We'll continue to experiment with show structure here as it goes on. If you haven't already, please subscribe to the show and feel free to follow us on any social media platforms out there. For everybody here, I'm Zach Ritchie. Thank you so much for listening to the Thrive and Prosper podcast. Warning: the financial insights shared on this platform reflect personal viewpoints and are not expert advice. Fund and Grow, its staff, and agents are not liable for any results from following these insights. Take time to do your own research or consult a financial advisor for professional advice. Decisions made based on Fund and Grow's podcast content are solely at your own risk. Since 2007, Fund and Grow has helped over 30,000 business owners and real estate investors across America get access to over $1.6 billion in growth capital. We're on a mission to empower entrepreneurs and investors by helping them utilize the smartest form of funding: low-interest, unsecured business credit.